Next up, Osisko Metals and their president and CEO, Jeff Hussey. No, not Jeff.
Not saying instead of hair there. Jeff, hold on. Yeah, Jeff couldn't make it, so we wanted somebody with a bit of hair to come give the presentation. All right, so I'm here to talk to you about Osisko Metals. There you go. So Osisko Metals, if you look in the big document that was given to you, there's an investment analyst report there. It refers to Osisko Mining, which is not Osisko Metals. And I'll start off really rapidly with that. Osisko Metals is part of the Osisko group of companies. Essentially 3 companies, more or less right now. You have Osisko Gold Royalties, which was formed after the acquisition of Canadian Malartic, which was the largest gold mine in Canada. Osisko Mining, which is what's referred in the document there, which discuss the Windfall project. And last year there was a decision to create a base metal vehicle to leverage the deep relationships that the Osisko group has created over the last 15 years to form a vehicle focused on base metal. So we're currently, we have 2 zinc projects in Canada, and those are the 2 I'll be talking to you about. So this here is the chart that really shows you the Osisko story. Again, Osisko Metals, over the years, over the last 15 years, there's $9 billion worth of value that have been returned to shareholders. So clearly it's a group that is committed to shareholder growth, and Osisko Metals shares that mindset, shares that DNA going forward. When we initiated the company, it's not a year old just yet. It started in June last year. We took a shell called Bowmore, renamed it Osisko Metals, and really went out to raise some capital. We were aiming to raise around $10 million. In the end, we raised a total of $37 million over 3 months. So we are extremely well capitalized. This chart is a little bit out of date. Our cash position has gone down a little bit, and you'll quickly see why, because we are quite aggressive in drilling. But what I want to show right here is we do have a strong shareholder base to continue our development and growth. Out of the UK, we brought in M&G, JP Morgan, and BlackRock. We made a $35 million acquisition of the Pine Point project, which I'll be spending most of my time discussing. Through that acquisition, we brought Zebra. Zebra is the family fund of Lucas Lundin, as well as having the Osisko group become a shareholder. Caisse de dépôt is a pension fund out of Quebec. So we really have strong support to leverage and fulfill our objectives, which is advancing the Pine Point project. The other key aspect here for any story, it's great to have the capital and access to capital, but you got to have a strong management team. Robert Wares and John Brzezinski on our board, both founding shareholders of Osisko Metals and the original Osisko Mining. They've raised over $1 billion to build that particular mine. Luc Lessard has built 12 mines over his career. He built Canadian Malartic, again, the largest gold mine in Canada. He's currently building his 13th, and he'd be very pleased if this was number 14. Jeff Hussey, who was not able to join us, is from Noranda. Noranda being one of the largest mining companies that no longer exists in Canada, but he was at the startup of Antamina. He worked in Brunswick, which was the largest zinc mine in Canada for a period of 50 years. We've also brought in Robin Adair, Gary Woods, also key technical people. And this is really a core focus for us, is we need to make sure we have a strong team to advance this project. I'm going to skip this. Pine Point, our core focus here. Pine Point, over a 20 years, a past producer, and over its 20-year mine life from 1965 to 1985, was the most profitable zinc mine in Canada. The reason why it was profitable is this open pit zinc. Open pit zinc is actually quite rare in the world. 90% of zinc production comes from underground, 10% comes from open pits. The only major commodity, if you include copper, gold, and nickel, that is predominantly from underground. These grades at 10% would be equivalent to, would be very good to do underground. So we're actually quite pleased to have access to this project. What you see here is this mine, when it closed in 1985, it didn't close due to a lack of ore. There's actually, they mined 64 million tons from about 50 deposits. But when the mine shut down, when Caminco shut down the mine, they actually left 70 million tons on the book. Now, some of it was at lower grade, and that's one of the reasons why they moved on. But you have to remember, it's the mid-'80s, And Cominco had another project that they were moving on towards to, and that's the Red Dog, which is obviously now the largest zinc mine in the world. So quite simply, Cominco shut down Pine Point and moved human capital and financial capital instead to Red Dog, and left quite a lot of tonnage on the books, which is perfect for us because it means we can apply the Osisko model, which is drill, baby, drill. Osisko Mining drilled 800,000 meters last year. We're going to be drilling a minimum of 50,000 meters at this project, mostly towards conversion and exploration. This project in the Northwest Territories of Canada, and I'm going to show you a slides if you're not aware where the Northwest Territories are. So you see I have a pointer here. So Hay River. So we are connected by rail into Canada's rail network. This shows CN here. So we do have rail access to send it out to Asia or to Europe. What we also have, as you can see here on this chart, is we actually have hydroelectrical power directly on our project. Again, this was a past producing mine, so it had all developed infrastructure for it. And it has paved road coming in from Edmonton. This rail line that comes up from Edmonton to Hay River is actually, Hay River is known as the hub of the North. Fuel, cargo, cars all come up that rail to supply the Northwest Territories. All those diamond mines up in northern Canada are supplied through this town in the Northwest Territories. So it's a very active rail line that we can that don't bring products back down. So CN is very keen on having a partner to move commodities back down. Pine Point, when we acquired it, had a PA that was done on it. PA was unoptimized. We are currently going to be optimizing it. It already showed very strong numbers, but what I want to impart on you is the metallurgy. This is an MVT deposit. It would produce some of the cleanest concentrates in the world. We benchmarked it against 150 global concentrates currently being produced, zinc concentrates currently being produced. If it was in production, it would be one of the top 3 concentrates. And that's going to be really important going forward in the zinc market because a lot of the zinc supply that's coming online is somewhat challenged in terms of deleterious elements. So you're seeing concentrates with elevated manganese, arsenic, mercury. And this concentrate actually has 0 penalties associated with it. It actually has extremely low concentration of any deleterious element. So it's the premier blending product. Trail, when this was in production, which is a tech-owned smelter right down here in British Columbia, actually saw throughput increase at their smelter when they were processing Pine Point concentrate. When we went to the International Zinc Association back in February, we knew demand was going to be extremely high, but we were still quite surprised just how much this type of product is in demand. We would expect it to command a pricing premium relative to its peer, again, due to the extreme blending capacity of this product. Now, going back to Pine Point itself, we're currently focused on converting a lot of the historic open pits that were left by Cominco. So you can see it's a number of little pods all along these haul roads that are still there. This is a Google Earth image, and I invite you to go see it in your browser. You'll notice that these haul roads are actually chip sealed 15 meters wide and require minimal upgrade. We really have all of the infrastructure ready to go on this project. So we're quite keen to be moving along here. There's the substation right next to the old tailings. We wouldn't actually be reusing the old tailings facility. We'd be using the old pits to put the tailings into it. So this would be a mid-sized zinc mine in production for a Canadian capex between $150 and $200 million, something that's very achievable relative to our market cap and relative to our cash position, our current cash position. So we're drilling 50,000 meters on this project. We're also drilling 50,000 meters in the Bathurst mining camp. This was the largest zinc mine in Canada, shut down 2 years ago. We've consolidated most of the exploration ground in this area. So between the 2 projects, we are drilling 100,000 meters, which makes us actually one of the largest base metals explorers and developers globally right now. So we're quite keen to get going on both projects. We'll have a lot of catalysts throughout the entire year, both in terms of exploration upside, development upside, and advancing our stellar world-class portfolio of assets. Thank you.